Wow, wow.
All right. Very good morning to everyone on this call. My name is Victor. I'm going to be your host for today's morning market trip. So basically what we try to do here is to see how we can take advantage of the moves in the markets and make money, all right? So let's see. I think we just have very few persons on call. So let's just exercise a bit of patience. The next like 3, 4 minutes would really officially kick off this session. So just hang in there. I'm sure everyone on this call can hear me, right? I'm sure I'm audible enough and my network is good, so you don't have any issues. Okay. So but before we actually, so we can just buy a little bit of time to wait for others to join the call. Let's quickly just look at what our fundamentals are saying for today. So we already have this, um, excuse me, this climate. Today is Wednesday. Yeah. So we already had GPCPI. Wow. So I'm expecting some move and it was bad. That means GPJPY most likely will keep dipping. Let me see. Movement. This guy is going to dip. This is going to the GBP. Now let me confirm how weak the GBP is compared to the JPY. Let's see. Okay, you see the GBP is weak compared to the JPY, so we shouldn't have a problem for price of GBP JPY to head to the downside. Like that should be one pretty easy trade for today. Let me quickly go on the trade on my phone. Okay, so just a moment. All right. Okay, so from what the fundamental is saying, at least we should be able to have some downward. Besides, price has been falling, and it's currently sitting at a supply area right now, right? This particular level. Oops, sorry. Okay, so around this particular level right now, so we should be able to have some drop into one of these two key areas, which is one, price can get here. Now, if the momentum is strong, then obviously price will break and go even further to the downside. Right. If the momentum is strong, let me see from my higher time frame, then price will come back all the way to this support level, all the way to this support level. That is if the momentum is strong. Oh, okay. Well, I just want to talk about one very crazily, easily, like one very easy strategy. It's more like a situational analytical strategy. I just want to show you today. All right. So in periods where it plays out, then you should take advantage of it. Now, let's go back to the fundamental because we just quickly look at GBP JPY because of the CPI that just came out around 8 a.m. So, okay. Hence, for today, the rest of today, we have the core retail sales, as well as the retail sales. Then later, we have Bank of Canada monetary policy reports. It's more like equivalent of the FOMC for the US. Okay. Then we also have it's all about Canadian dollar today, mostly. Then just a few of US dollar by 230, Canadian dollar 345, then as well as 4:30 p.m. Then later tonight, we're now going to have the Fed Chair Powell speak. So it's more like not really like FOMC, but whenever Powell is speaking, the market tends. I'm sure some of you have seen some, the way some people represent those videos, some funny videos online, where when Powell just comes to say good morning or good afternoon, market just moves, right? It's sentiment. It's sentiment, basically. So all of these things, they are sentiments. It's not yet facts. It might be plans of how the economy, how the US intends to tackle some of the financial challenges they are having with regards to their currency. Specifically now, we all know one of the major things affecting the dollar is the tariff introduced by the President Donald Trump in so many countries, especially countries who are doing businesses with the US. Now, the worst of it all is with China, double figures, three figures inflation, over 100%. And China is trying to also retaliate. It's more like there's a trade war going right now. But China has reduced the US used to be like the dumping ground of all China product. China is more like an exporting economy, while the US is more like an importing economy. Although they export, so they have a balance of trade. So, but they import both humans, resources, services, as well as products, So now a lot of them come from, Asia, China, Japan, Singapore, and lots of them. So China is like the heaviest of them. So if China might decide, okay, we are selling elsewhere because you are not the only economy, right? We want to sell to other countries. But the funny thing is that every major country that China supplies to, US has also introduced tariffs to those countries. Now it's more like a trade war, telling them if you keep buying from China, then I would drastically increase the tariffs you are bringing of goods that you are bringing to my country, which will affect businesses of your citizens, your own businesses, and the like. So it's more like a trade war. US is not just fighting China; it's fighting those who possibly do business with China, trying to cripple China, as the case may be. So that is currently affecting the US. And I think that is going to be for a while. That particular um, fundamental is going to be for a while, as long as the trade war lasts. If you notice now, US dollar does not really have much strength. Like it doesn't even sustain some good level of strength for a while, a long time. The best it can do is just have a little bit of strength, retain it for a while, then drop again. So it's been long. Personally, I've seen dollar have that much strength and retained the strength. So that's basically the fundamentals that driving the market for today. So let's quickly go to our technicals right here. Our technicals right here. All right. Okay, so let's start from. So I said I want to introduce a particular strategy. Someone asked, what strategy am I? As usual, I think the person have been in my review for a while. Just know that I just try to come up with a strategy, like just show you one or two strategies to, attack the market at every point in time. Okay, so if I am to convert this, okay, someone wants to ask a question, doing you have a question? Well, I can't find you anymore. You can quickly unmute and ask your question or your contribution. Okay, in that case, we just continue. All right, so let's start
Hello.
from you. Okay, yes.
Yes,
Go
sir.
ahead.
Good morning, sir. Morning,
Good
sir.
morning. Good morning. Please go
God
ahead.
bless you. Yes, sir. What I want to ask is not about this instrument. I want to ask about US 100. It's been trading. Yeah, it's been trading bearish in the last 12 hours. 12 hours. Yes. Kindly just help us going through it and let's know.
Yes, it's part of what we are going to do. It's part of what we are going to do, actually.
God bless you. Thank you, sir.
You're welcome. So I like to take it step at a time. So let's quickly start from the USD JPY. So basically you have your chart like this, right? So I just want to show you how you can sometimes trade with range whenever you have a directional bias. So for instance, currently this is more like a downward trend, like the USD JPY is currently edging downward. Okay, so as the case may be. Now, in times like this, when the trend is clear, and it's clear, it's visible to the blind, right? It's clear. What you can do, I have this particular indicator to make it easy, okay? So what you can do, let me do it manually first before I introduce to you. So now I have, let's say for instance, this is the high of the previous day, like the highest point of the previous day. You can extend it. Then this is more like the low of the previous day. Price close at this point here. Okay, so what we can do is the moment price open, one of two things. Price can come back into this level. If price can go as high as the previous day's high in a downward trend market, then there's a very high probability that price will crash, either back here or even in a downward trend. The price can just resume. Price can just open and immediately start going to the downside. Like immediately start going to the downside. Okay. So now in this particular case, what we want did not play out, but we can't tell if the momentum is going to be strong or not. So it's more like a gamble. Hence, let's use the following day. This was more like the highest point. The highest point price got to. And this was like the lowest point price got to. So, especially in a downward trend, okay? Now, the moment price opened, we want price to first go to the high, okay? Now, this particular day, you use this day for the next day trading. So, the moment price opens, I want price to go towards the high so we can sell this market again. If it does that, I sell this market, it comes all the way down. But it becomes tricky if price can hit the low. Now, notice that immediately price open for the following day. So I'm using yesterday's movement to continue today's movement. So this, let's say this was yesterday's movement. This was a high and this was the low. So what I want to see is the moment price opens the following day, which is today, I want price to go to the high of yesterday so that I can sell again. Now, but price didn't do that. Price came to the low. It bounced off, taking it as support. Now, you can notice that the moment it starts pushing to the high, price starts going all the way down. Now, most likely you wouldn't have sold. Now, like I said, it does not happen every day, but times where it happens, you find a very good setup, right? You find a very good setup. So let's see this following day. The following day, this was a high, and this was a low. So I'm trying to point out where things like that happen. Now, this price opened here. Notice that it was close to the low, so it bounced off. Now, the moment price started to approach the high, this is where you now see seller's pressure. Although this one broke above, but it's still a downtrend. Notice that if you sell, price eventually still came to the downside, right? If you sell, it eventually came to the downside. So fast forward to the following day, this was the high. This was the high of that day. And this was the lowest point. Notice that price was already at the high of the previous day. The moment price opened, it just retested it again and fell all through, right? These are like situations that we want, right? These are situations that we want. In a downtrend, I want price to open first the following day, pull up first, then fall again, because I want to sell. I want to sell, but I don't want to sell when price has already gone down. I need price to go back up, close to the high or exactly at the high, then I sell again. So if you notice, this was the high for this particular day, and this is the low. This was the lowest price for that particular day. Now notice that when price opened, it first of all, it was already close to the low. It broke the low, came down. Now the moment it could get to the previous day's high, what do you notice? It started selling again. So this is more like a situational analysis, all right? Situational analysis. Now price is ranging. So currently price is ranging. So let's move it to current price. So you can see that this was the high and this was the low. You see, this was the low, right? So this particular day, price neither got to the high. Look at it now. Price for here, price neither got to the high nor to the low. Okay, neither got to the high nor to the low. In cases like that, I will still keep using, since the range is not far. If I want to make it like this, sorry. So this is too tight. I don't want it to be too tight. Price can just easily break out, which we have seen price breaking out, right? So in this case now, price can still head down. All right, price can still keep going to the downside, because no matter how big or small the range, especially when the range is as small as this, price can keep going in any direction. So since the USD, let me say Control N, since the JPY is currently stronger than the USD, like I said, USD is weak, then for today, I expect the JPY to keep going to the downside. So there's a simple indicator for this particular strategy right here. The MSR, as markets structure range. Okay. So this is it like this. If I apply candles, all right. So something like this, it even tells you that the moment price hits the high of the previous day, you sell. Now, this one is also trying to serve as a buy, especially when price hits the low of the previous day. So what you do is that if on a downtrend, you focus on the sell, but in an uptrend, you focus on the buy. It can be separated, all right? It can be separated, so you always still see the buy. But on a downtrend, you're focusing on the sell. Now, let's move this to the US 100. Let me see. This is the same indicator on US 100. Let me just make it candlesticks. Now, this is called situational analysis. It's still technical, but the combination of both technical and situational analysis, which is in a situation where I have a downtrend, this is what I expect to be happen. All right. So let's pull it again, and let's see how well this has worked for US 100. Okay, so when I have an uptrend, I will always want to be buying, but when I have a downtrend, I will always want to be selling. Now, these arrows are going to tell you exact time to enter the market for a sell. Notice that this was like the previous day's high. This marks different session. This Asia session, London session, and the New York session, this big. This is Asia session, this color. This light blue here is the New York session, and this is London session, and this last one is the New York session. Okay, so Asia, London, New York. Asia, London, New York. Now notice that the previous day, price range in Asia session, pulled down in New York session, London session, and pulled down a bit also in the London session. Now notice that irrespective of the fact that it gapped down, the moment it could go close to the high of the previous day, all right, especially towards the, this is more like the London session. So price didn't even get the 100% and it started to fall. Now, irrespective, even if it gets here, it will even fall massively, all right? So fast forward to the next day, notice that this is the next day, this is the low of the previous day, this is the high. And remember, market is falling, right? So we are looking out for sell. So what do? The moment price opened, it worked its way up to the high of the previous day. And guess what? Started to fall, all right? So basically, this is what we are looking out for. Now, cases where things will not play out like this is where you have fundamentals, right? When you have mass fundamentals that pushes price in a particular way. Fundamentals will not respect this. So please note that you are not using it when there is fundamental, right? When there's fundamental, market can change. Okay, market can really, really change. So in this particular case now, price went way higher than the high of the previous day. So we possibly want to be selling here if there was no fundamental. But because of fundamental, you want to wait it out. This was the highest point. Now notice that the moment price opened the following day, it was already at the high point. Guess what happened? It started to go to the downside. All right. Now price pulled up here. Now, given that we were still on a downtrend before this fundamental happened, right? Before this fundamental happened, price has not really gone too high. So for US 100, let me give you the situational analysis, then I'll give you the, aside the situational analysis, the normal technical analysis that we have to be looking out for. So if I'm to be using the situational analysis, right, since price has pushed high, it came to this place. It couldn't get to the low. So obviously, then we are possibly looking out for buy trades, right? So the following day, the moment price opened, it came to the low, then we can start buying. or it gave us our buy signal here. Price went, so you notice that price now gapped up to the high, right? Came to this point, bought again. Now price is ranging. So it means that I will have a tight range to deal with. And remember, when we are dealing with a tight range, price can break out. So this was like the high, and this was like the low, right? So price just came very close to the high. But for yesterday, this was like the high, this was the low. Very, very tight range. Very tight range. Hence, you could see that there was a massive gap to break out. Even if there was no gap up or down, price would still have broken out either to the upside or to the downside. All right. Price will still have broken out. Now that price has broken out, in fact, the moment I saw this in the middle of the night, I quickly wanted to place itself because from experience now, the moment price gaps in a particular direction, even if it moves to cover, it will still keep pulling to the downside. Okay. So that is the institutional analysis. Now let's go to the normal analysis. Please, just a minute before we do the normal analysis. Just a minute. All right, we're back. Sorry about that. A break. What's the difference between CBEX and rally trade? Well, CBEX claim that they are basically it's more like a cryptocurrency trading company, and that they trade using AI. So they trade for you using AI, and you have 100% returns within 30 days. You know, we don't promise you that in rally trade. So in rally trade, we trade different markets. In fact, basically, we don't even trade crypto. We trade different markets. We trade the currency market, which is the forex market. We trade the commodities market, where you have your gold, you have your oil, you have your commodities. We trade indices. We don't trade individual stocks, but we trade them as indices, collective stocks put together. Right. So this is what we have. And since you've been on our platform for a while, you notice that these are the things that you have available for you to trade. And unlike CBEX that trade for you, just deposit your money, they trade for you. No, you deposit your money, we teach you how to trade, you trade. Or you already experienced, you come, you deposit, you trade, all right? Make your profit, you withdraw. Now, unlike CBEX, you have to wait for 30 days. You see your profit, then you withdraw your 100% profit, or as the case may be. Hence, here you withdraw at any time you want to withdraw. Everything is in your hands, all right? You put in your funds, you can take out your funds, all right? So this is more like the major difference. It's a red flag. Any business promising you 100% consistently. Now, 100% is achievable. For those, I'm sure a lot of persons here have deposited money and made crazy amount of money within a short period of time, way more than 100%. People have made 2,000%, 5,000% in a month. I've seen them, my experience, I've seen people have done it also. Now, but the issue is it consistent? That's the thing. It's not really consistent. There are months where you can make like 500%. and there are months where you barely make 50%, all right, based on market condition. Not that you don't know what you are doing, but market condition fluctuates a lot. So your strategy might not play out every single time. And there are times where market is just moving smoothly, and your strategy will play out very smoothly. From experience, you have times where you have a very wonderful week or very wonderful 2 weeks. The market was just simply doing its normal thing. All of a sudden, market changes, you apply the same strategy, it seems not to really work like before. Okay, so you just need to be patient, wait for times like that. I reduce my risk a lot. If the market is not clear, as much as I still want to enter the market, I will just reduce my lot size. Simple. My stop loss will not be that wide. That's all. Okay, so I still want to trade. Yes, it can still go, but I reduce my risk. But when I see the market is clear for the last 2-3 days. Market has been clear, strategy is playing out. Then I increase my lot size again, multiple positions, and that's how I win the market. So basically, I don't know if that answers your question, Mr. Felix. Right? All right, so going back to our analysis here. So now this is for US 100. Now, basically, because of all that's happening, the stocks are not like the most they are risky now to hold on to for a lot of Americans or a lot of investors are sometimes pulling out a lot of their funds. So you could see that this has been edging to the downside. Before that, it ranged a lot. All right, you could see price range at this point. Now I'm on my 4-hour time frame. Price range a lot at this point. Then before we had a break to the downside, sharp break to the downside, price retraced back, tried to get back to that origin, but couldn't really. And we have another sharp, massive fall again. So you can see that whenever price is falling, it's very sharp, very fast, And when price tries to recover again, before you say Jack Robinson, it's falling again. So now this was the previous low price got to, like the low point price got to before, and it tested this low a couple of times. Right, a couple of times. Now it has broken out of that low. So you can see technically, we are heading to the downside. Now this is my 1-hour time frame. So break this particular level that price has retested. Just hold on. So let's go back so that you can see the key levels that we have right now. Right, we have key levels right here. So I think I should even mark these key levels. Okay. Okay. This is more like the key levels that price has been using before. Okay, then we broke this particular key level, tried retesting, couldn't establish another low at this point here. Okay, established another low here, respected the low a couple of times. So we want to deal with the most recent level right now. So you can see it's step by step, the most recent level. Now, why did price gap down? If I go to my 1-hour time frame, why did price gap down? Now, you notice that, go and check your chart. A lot of times you notice a gap in price is when price started trading within a tight range. Okay, started trading within a tight range. So notice that you see that the range here was very tight. You can see the high and you can see the low right here. Now, this was for the day. Now, the previous day, the low was slightly lower and the high was slightly higher, right? But the next day, the high came even more tighter and the low even pushed tight. So evidently, it's either price moves a massive move to break or price just gapped out below this particular zone. And in my own opinion, when price does that, price wants to head all the way back down. Now, especially because price is also close to a previous low that was broken, and this low is now becoming a resistance. Also, it has formed a supply area for us to trade with. Okay, so that is why price is going down. So for US 100, price should be heading all the way back down. Now, price can come all the way to this liquidity pool here, one, or it comes all the way right here, all the way right here. Okay. And this previous upward move that price really just made, you notice that price has broken this particular trend. Yeah, okay, let's see. Okay, so at least price is coming all the way to this level. It might range here, break it, come all the way to this particular point. So in my own opinion, price should keep heading down for today. I expect price to close bearish. Now, if any case, price pulls back up to this level, just use our institutional analysis. If price can go back to the high, then, it's forming a resistance level here, then we should be able to sell price back to the downside again. So that's it for US 100 for today. Price I expect it to keep it bearish. Remember for USDJPY, I expect price also to keep it bearish. Now, there's been a lot of pressure on oil. Oil has not really been doing well. In fact, there's a forecast that oil should continue to pull to the downside. So basically, you can see that, excuse me, we'll get to all of this, all right? We'll get to it. It's just patience. All the gold, euro, years, you analyze them, right? Just need to pick them one after the other. Okay, so you see after massive range for oil, massive range for oil, you can see that there's been a breakout. Now, all oil is trying to do, in my own opinion, is trying to, or from experience also, yes, but my opinion is formed based on the experience I have with all of these instruments and the way they move technically. So price broke out from here. Is the indicator that, that points the arrow. Okay, so now price has broken below this range. So all US oil has been trying to do is to pull back up to retrace back to this level here. It's trying to retrace back to this level. We can get to this level, so our support becomes resistance, right? So that is what it's technically just trying to do. Hence, I still favor US 100 pulling to the upside. Good morning. So it's okay. So how do we know when to now enter for our buy on our oil? You know when to enter for a buy on oil if price can come all the way to previous levels of support, okay, which is, so if price can do this, can come to this levels right here, then we are buying it back up, right? We are buying it back up if price can come to this level right here. So oil still favors going up, but irrespective, it can just pull down a bit because it's trying to form a resistance area for us here. You can see it's trying to, well, this is a 1 hour time FIBONACI. So it's trying to form a resistance area for us right here. So which is currently preventing it. So if that's the case, price need to come to a lower point, a low key level, pick momentum, then keep pushing to the high side, right? So for oil today, this is the situation. If price can come down here and buy, or if it goes back up here, I wouldn't sell. I want to see if it will break it and continue, or I would also wait for it to see if it can come all the way down. So basically, I need it down for me to buy it. And that's for oil. Let's go to Euro USD first before we now go to gold. I like finishing currencies. I don't like to do all of them are coming back again to currency. So this is Euro USD now. So out of most instruments right now, Euro USD is still doing well in terms of Euro being the base of pushing further and further to the downside. Now, before all of this started, the Eurozone basically was having a very wonderful economy. Hence, price started to pull up already. Sometimes you just have a a bit of slowdown, retracement, but irrespective, price keeps pushing to the upside. So let me see. Okay, price has broken this previous level right here. It broke these levels here. Now price is now around these levels. Now this is my daily time frame. Price is now around these levels. Now these were the levels that kept price here. You see this level here? The price range and broke. It kept price here, kept price, right? Kept price. So I wouldn't fancy that price just breaks and keep going. All right. I want to, the only condition for which I will be buying the US Euro USD is if price breaks this particular area in between this line that this range. Price breaks this range, then we keep buying ultimately, all right? But for now, I want to see what price will do for Euro USD. So let's see. If at all we're having any buy, it's just until price gets back to this level here. Until price gets back to this level right here, if at all. So, but I don't fancy the buy. Sorry, Control N. What's going on? Okay. Just a moment. Let me apply. Now, obviously, the USD is weak compared to the euro. That's why you are seeing price pulling up. I remember I told you that for most times, the USD doesn't retain strength. Hence, even if I would buy, I would want price to hedge a little bit lower. I want price to hedge a little bit lower. We've looked at GBP/JPY already, but I just to look at it a bit again. Just hedge a little bit lower. So for US 100, for Euro USD right now, given the current momentum that Euro has over the dollar, I fancy that price should keep being bullish, at least until it gets to this high again. All right. And even on your 15 minutes, this is how it looks like. In any case, if we want to be very careful, because it's dangerous buying when price is already up. Okay, just a little bit. If price can retrace a bit to the downside, then we can keep pushing price to the upside. But as much as you are buying, you are not extending your lock too far, please. Price can get to, you can see all the way here is that previous highs that we have identified on our daily time frame. So price might struggle going above that place. Okay, so GBP/JPY before gold. Like I said, GBP/JPY should edge to the downside for today at this resistance level. The only reason why we would possibly consider buying is if momentum shifts and price has to break this resistance, retest before we keep buying. So for now, it fancies more to the downside, especially because the CPI for GBP today came out and it came out bad. So for those who looked at the CPI, you will notice that today being Wednesday, we had exactly 8 a.m. The CPI for GBP, that's the consumer price index, inflation rate is just slightly high, just slightly, not that significant actually, but at least there's a little bit of highness in that inflation. Hence, the GBP is not expected to have that much strength, all right? So, but the JPY, the Japanese yen, being like a safe haven, when things are not going well, the Japanese yen is also like a safe haven. So you will notice that for most parts, the JPY has strength, and it's because the GBP compared to the JPY. So in crisis like this, the Japanese yen is more like a safe haven, which means that it's going to be having more and more strength. So compared to GBP, which is the base, the JPY is having more strength. So hence, the same price does more of sharp turn. You know, when price is going down, it does like this sharp, downward movement. There's a lot I would like to tell you about the GBP pair because it's one of my favorite writers. Whenever it's, the Japanese yen just gains strength, there's more like a sharp pump. But overall, the GBP JPY trend is still an upward trend overall, right? Overall, okay. But in terms of crisis, in terms of economic turmoil, in terms of risk, JPY should become stronger, right? Okay, JPY should become stronger against the GBP. Now, we've been having some difficult times, especially with this trade war. So a lot of persons are also banking on the Japanese yen. So most times fancy the Japanese yen against the Great British pounds. Hence, price tends to the downside. Now, today shouldn't be different. And if at all it's different, then obviously just wait for price to break above this resistance. Then we keep pushing price to the upside. The bulls are back for gold, obviously, pushing price higher. Now, one thing you also need to look, trading is a combination of so many factors. So like it's a combination of factors put together, which is you don't just keep considering one thing. There are other things that will affect your trade performance in the long run, which is, imagine you trading, you are trading on a Friday, and by, let's say, 1 p.m., 1:30 p.m., you are in US 100 position, either buy or sell. You are trading gold, you are trading, Euro USD, USJPY, or any USD pair. By Friday, first Friday of the month, which NFP, we're expecting NFP to come out first Friday of the month. Now, around that period where the NFP should be released, you are in the market trading, having no knowledge that NFP is coming. All of a sudden, boom, price pushes to one direction. It can just favor you. That's luck, actually, because you're already on that trade. You don't know if it's be good or bad. Or price goes absolutely in your the opposite direction and gives you massive loss within a short period of time. You just notice that price all goes against you, right? So now that is what it means. Fundamentals don't come every day, but they come once in a while. So if you just are trading technically alone, as much as it will be good, you have those periods where you just hit some crazy massive losses. And it's not your fault. You did your due diligence to analyze technically, but you see, you didn't consider other external factors that affect price. Now, basically, if you notice that, especially this trade war, if it's getting intense, the more intense it becomes, the more gold pulls to the upside. If there's any glimmer of hope, any iota of consideration, then you see gold tend to the downside. Once it becomes, the heat is turned up again, then you see gold pulling to the upside. Now, obviously, gold has hit another high, right? You can see it has hit another all-time high again. So, guys, gold is sweet to trade by, but you see, the problem now is that period where gold will come down, you don't know. And if you are still in the market around that time, there might be problem. There might be problem, all right? So, but for now, the bulls are still in charge. The bulls has taken over again. And when the bulls take over, they take over aggressively because these are investors trying to just make the most of their investments, trying to save their funds, looking at something that is a little bit less riskier. So price is just pulling to the upside. And if at all price, for those who have missed buying gold right now, you need to wait for some form of retracement in order to buy. Now, it doesn't mean you can't buy now. If you buy now, it becomes risky. Price might push up a little, then all of a sudden, give some massive retracement, unexpected ones, and you can find yourself in some huge drawdown. You know that gold is very volatile, right? So the drawdown can be very huge in a short period of time. So for us to have a safe buy, we would need this previous range that price just broke. We will need a bit of a retracement into it for us to continue this push-up, right? A little retracement into it for us to continue this push-up. So gold is just simple. Right now, it's just like an opportunity has been missed. Gold is taking the ride already. If you join now, just know that it's a risky trade, all right? Now, it doesn't mean that it won't continue. Just know that there's still a chance where price will come down because no matter how far price goes, it's not a one-way traffic. you definitely see some retracement. You will definitely see some retracement. Okay, so that is about gold. What else? Let's also let me see if US 30 is making any sense for us to look at. Now, the same thing that's happening to US 100 is what is also happening to US 30 right now. This previous low taken out, serving as resistance. So it fancies towards the downside. Whatever is happening to the US 100 right now is happening to. We've analyzed GBP, JPY, okay? Uh, Euro JPY. Okay. So let's say after this one, just one more Euro JPY. Sorry about that. Okay, so if you notice also, due to the strength of JPY, matching the strength of the euro, price has also been ranging. Let me use my daily time frame. Price has also been, giving us some massive range. Now, given the fact that this range is like quite massive, we can trade in between this range. Now, it's risky to trade a ranging market, but when the ranging market is a massive one, like this is my daily time frame right now. So you can imagine how massive this range currently is. So we can trade in between this massive range. And this is more like the this is more like the lower part of this range, the support area. So my 4-hour time frame, this is how it looks like. Now I've not even zoomed out. I'm sorry, I've not zoomed in. You can see how massive the price is right now. So all we just need to do is okay, price has hit the high point, but price is not really coming on this particular range. There's more like a mid support area for price right here. A mid support area for price around this point. Okay, so for Euro JPY, it has from this highest range, the resistance level, to this support. You notice that it sometimes bounces off this middle area, break, come to the downside, break, retest, get to the upside. So now it's trying to retest this area. So one of two things will happen, right? One or two things will happen. Price keep falling and comes back all the way to this area. So I fancy the Euro JPY, more to the downside since it's coming from this resistance level. Worst case is that price goes back to this resistance level. Worst case, gets back here, or pushes higher and hits this resistance. Irrespective, gets to this place, most likely it's going back all the way down. So you still be in profit. And if it comes down, this is our target area. So target area. So basically you will be reacting to whatever price decides to do. Reacting to whatever price decides to do, which is how do I know that I should sell? If price can break this level, let's go down right here. If price comes back down, breaks this current support holding it, then wait for a retest and we sell. If it breaks here, wait for a retest, we sell. But right now, you shouldn't just rush into sell now. If at all price gets to this point, then you can sell again. Okay. So basically, I'm looking out for more sell opportunity for Euro JPY. I saw someone posted with. That'll be the last thing we'll do for quality day. Okay. Oops. Okay, so let's check out our trend for weeks. It's not looking up, it's been looking down. Like it's been looking down, not looking up at all. Which has not been looking up. It fancies going to the downside. But before you can sell, before something goes down, first of all, it needs to go up. If it doesn't go up, then it might not have much momentum to go to the downside. So what do we need for us to sell? We just need to look for a strong area of supply. A strong area of supply, which we have around here from this particular trend push like this. If you notice this particular level here, when it pushed down, it created a supply area. And this area has been where price has been, doing business with in terms of selling from. So what do we expect? Currently, what do you think? What do you think should happen to it? What do you think should happen to it? Now, this is an open question. What do you think? From where price is right now, do you think price should be pulling up or should start pulling down? It's an open question. Anybody can answer us, please. No response. Okay, so price should respect this level again and pull down one more time. If in the long run it should go up, well, at least it should respect this particular level first by pulling down. Okay, all right, that's good. Idris, thank you so much. All right, Francis, do we have time to take? Okay, please, you can kindly, where's Francis? Kindly unmute and ask your question or give your contribution. Yes, quickly unmute. Please go ahead.
Good morning, Mr. Abolari.
Good morning, sir. How are you doing?
I do and always enjoy your analysis so much. First and foremost, please, I would like to have your number.
All right.
And then two, for the question you asked, I expect the instrument to go down.
Okay.
Because from your analysis and the chart, looking at it, there's
Yes.
more of liquidity on the downside than on the upper side.
Exactly.
There's more of liquidity on the downside compared to the upside.
Right. So that's good. So yes, you can hear it. In fact, they even give us more information. I just don't want to bombard us with a lot of things. There are so much liquidities right here, especially below this trend line. You can see all of these rejections here, especially when they form quick double bottom, quick double bottom. Quick double bottom. You have 1, 2 double bottom. So price will just come, test them, go back up again. Quick double bottom, price come, test it, goes back again. So we have quick double bottom. One, price came, tested, went up. So I expect price to still come down again because there are lots of liquidity pool lying around this trend line like this. The price, for it to go up, it's just like you want to jump higher. The higher you want to go, the lower you get to, right? The more you go lower, you bend down, you get more momentum to jump higher. So that's what price does. So that's the basic principle with this market. For price to really push up massively, it needs to push down first. And why is it pushing down? It needs to go down and get more liquidity, more strength, more fuel in order to sponsor that movement that it wants to make. So thank you so much for your time. I have to call it a day right here. So let's say, okay, you have the number right here. Okay. So 002658249 is my number. 002658249 Victor. So you can just reach out to me if you have any questions, have any other concerns, or you just reach out to your account manager, and your account manager reach out to me on your behalf. All right, so thank you so much for your time. Looking forward to seeing you again in another session. Enjoy your day.